Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning. Well, good morning, good evening. Maybe somewhere in the world is good morning. More and more, it's good night, figuratively and literally. Guys, good evening, everybody. Welcome to another edition of the AccessATrader.com nightly wrap-up show. Again, hope everybody is doing well. Hope everybody kind of adjusted to the market. Again, we had the sell signal that you're not playing catch-up or in hope mode or in prayer mode. Hopefully, everything that we talked about over the last month you were prepared for, whether you were hedging your portfolio with SPYs, Qs, whatever the case may be, or if you are an active trader. Hopefully, just continuing to try to take advantage of the opportunities. Yes, sure, there's going to be certain days that's super choppy, super headline involved, and those days are going to rip out your hair. But again, the ultimate answer to the question of what happens when you have technical damage and give up a major moving average, well, we're seeing it play out here. And not only, I think the discussion below the 50-day moving average, you guys have figured out by now what happens next. But what we talked about over the weekend video that the bulls did not want to see, right? They did not want to see is a close below the 200-day moving average. And that's exactly what happened for 2 consecutive days. If you look at the numbers today, pretty big declines, man. You got the Dow Jones Industrial Average down 900 points. Again, not small, 900 points, 2% move. You got a 2.7% decline in the S&P, and NASDAQ got just smoked, absolutely smoked today, down 727 points, or eye-dropping or eye-popping 4%. Here's where I want to calm down the investor and kind of rewire the trader, okay? If you go back to the last 10,000 years, I'm obviously exaggerating too, but if you go back to the history of the market, go back, right? Guys, the NASDAQ, right? The NASDAQ in 2001, after 9/11, after the whole tech bubble burst, the Qs were at $27. Okay, $27. That's it. $27. We thought the world was going to end. We also thought the world was going to end in 2007 and 2008, right? The Qs went all the way back down to 25. Guys, the Qs, right, present day, the Qs are present day $473. Okay, so history, if you're an investor, don't look at your sheets every day. Don't look at your positions every day. You'll be all right, right? History has shown you it's on your side. History has shown that you will be okay. You might not be okay short term, but eventually you will be okay. The problem is if you're a short-term trader, right? And you've neglected the 50-day moving average, you've neglected now the 200-day moving average, and all the call bottoms everybody's been calling for the last 3-4 weeks. Thing you woke up to and you realize, well, apparently there was no bottom in sight, right? And that's kind of what I keep on reiterating the point. Again, even going back to the weekend video, I have no interest being long until we take out a previous day's range. Okay, and I'm going to continue to say that over and over and over again because that's reality. Here's where you kind of have to prepare yourself for what happens next. Okay, number one, the selling, and we opened down 200 points today, and I was like, maybe there's a shot we wash out, go red to green. Right? Remember we talked about in the weekend video, we're starting to get to that point where we're so aggressive to one side, there has to be some sort of relief, right? Relief. Again, even if you go back to 2022, and I want to kind of point that out. It's a little bit too early in the game to kind of state the obvious, but I want to kind of these guys get you there. If you guys notice, we had a pretty aggressive decline in 2022. What's the common denominator, right? What's the common denominator? And this is where I want to give you guys who trade both sides of the market a little bit of hope on both sides, right? We saw some pretty aggressive monthly candles, right? Now, again, the monthly candles haven't really formed yet because, again, this is only the second month, right? But you could see here in the middle of 2022, we had some pretty big monthly candles to the upside while the market continuously went lower and lower and lower, ultimately ending down 35%. We haven't seen that, right? We haven't seen that yet. We haven't seen any attempt of a rally yet. We haven't seen even a day that's a full trend yet. Anything we've seen that the market closed green has been just some big ass relief short covering in the last 40 minutes of the day only, right? Only to give it all back the next day and then some. If you look at the monthly chart in the Qs, well, we lost this trend line, this green trend line here. So the ultimate soft or hard landing, depending which way you want to have this conversation, but the ultimate soft or hard landing where the bulls can make a stand is somewhere around this 450 area, which is the next, rising support on the monthly chart, not on the daily, not on the weekly, on the monthly chart. So you turn around and go, man, there's another like 23 points before that happens. Yeah, that's the point, man. That really is the point. There's still another 23 points down. Like I said in the weekend video, is it getting harder and harder to short on weakness? Sure. But at the same time, unlike last week, right? Unless last week that we were just getting hit with headline after headline after headline, we didn't get any headlines today. You know why we didn't get any headlines? Because Twitter was down, baby. Maybe Twitter should be down every single day. If they can't tweet, it means it never happened. And because it never happened, we had a pretty disgusting decline, down 4%. Bitcoin, again, we've been talking about, for a while now, how it's still hanging around, as of moment of recording the video, it's around 78,000. I'm very surprised it's still in the 70s, considering it cracked that 90 area, even after it lost its Trump weekend pump. It got faded again. So it's very, very odd that it's still holding into the high 70s. I would have thought by now it would crack 70. But again, that's not here nor there. Elon Musk finally tweeted out when Twitter came back, or X came back, whatever you want to call it, there was apparently a major cyber attack against X. Again, I ain't messing with that, right? I ain't messing with that. That's not the worst thing in the world when you don't want to see Trump headlines. Okay, cool. Speaking of Trump, there was one very little spike today in the market in the middle of the day when Trump and the Chinese Xi, is that his name? XI, right? They said there's a potential June summit that they could kind of hash things out. June feels like a lifetime away, right? We are only in March the 10th. So the market continues to sell. This is the first time today, especially towards the afternoon. And again, I can't really gauge any fear on social media because I don't take social media seriously. I don't take anything on social media seriously. I treat it like Netflix is there for my enjoyment. So it's very hard for me to turn around and go, wow, this person is afraid. That person is afraid. I look at it as like, I really don't care. Right. But this is the first time that I saw with price action today, there was a lot of names that felt like there was a lot of liquidation. And that was a very, very important thing. So Tesla, right? I want to talk about Tesla first. And again, that's pretty much every single stock out there. Tesla today felt that there was some massive liquidation. It didn't feel like it was day traders, hedge funds continuously pounding this thing. It felt like forced liquidation. Pretty much closed at the lows of the day. Look at the volume expansion today. You had 181 million shares. This volume bar was the biggest bar since going back to November the 11th, right? What was November the 11th? November the 11th was like the blow-off top at that time, but it was the blow-off pause after earnings. So you see a significant volume surge. It means it feels like, right? It feels like somebody wants out of the stock. They were coming for the 200 weeklies, right? Again, that's a four-day rental. Is it possible it gets down to 200? Sure, anything is possible. You see NVIDIA continuously to get, listen, I don't want to go through the whole thing. Every single stock is getting sold. Does it really make a difference? We go one by one. But here's kind of where I want to get prepared for the other side of the equation. Tomorrow, obviously, I will be continuously watching the same names over and over again. If they start losing today's lows, second entry, again, for all you guys who are trading the PS60 theory, you kind of know what that means. But second entry for continuation of selling. The last thing the bulls want to do tomorrow, okay, is have a gap up. The last thing the bulls want to do, okay, because if we do have a gap up today's ranges will get taken down again, just because you don't buy. Again, if you've been watching this since it's the 50-day breakdown, you don't buy gap ups, right? Gap ups you sell into supply, and if you start gapping up on anything, I promise you'll probably get sold. At least the initial pull. I don't know what's going to happen towards the end of the day, but at least the initial pull. What we want to see, right? What we want to see, if this is indeed close to kind of like I don't want to use the capitulation, but capitulation, throw the baby out with the bathwater type of scenario, the market needs to open down 3-4%. I mean, not 4%, down 2-3%, right? We need to see another 2-3%. You want to see some outrageous looking prices, and you want your average Joe Schmo to turn around and go, yo, I'm done. I'm done. No mas, throw in the towel. I'm done. Then and only then can stocks start to stabilize, start moving back to previous breakdown levels, and then start going red to green. You need everything to go red to green. You just don't need one stock. You need everything to go to red to green. So that's what you need as a bull, right? You need that as a bull. You want the washout in the morning, washout trap, red to green, and then and only then can you have a rally. Because again, it shows you, history shows you, even going back to 2022, right? Even going back to 2022, you've seen how aggressive, right? You see these green candles. That means there's days and days and days of snapback rallies. It didn't just go straight down 35%. So you have the evidence on your side. You have the history on your side. The problem with this market versus the problem with the COVID market, we got COVID. That was the headline. Right? We are not barraged day after day, week after week, month after month, minute after minute by headlines over and over and over again. That was a big difference. And so far, we have not had a day that took out the previous day's channel. Guys, you know how long? Since right here, since the top. If you notice, every single day is lower highs. Look at this, guys. Every single day for the one gap up here that got faded, every single day is lower highs. So for us to rally or at least bounce or at least have a shot, right? Have a shot at one of those grind back 3, 4, 500 point moves on the NASDAQ, we have to open up lower. We have to open up a lot lower. We have to have a significant no mas, I'm done, get me rid of every position that I have. And only then can we start rallying back, take it out the previous day's channel, red to green, and hopefully we can have a 3, 4, 500 point kind of a dead cat bounce. That's what the bulls need, right? Whether they get that or not is a whole different story, but I am definitely prepared on both sides of the market tomorrow. If we gap up, I'm looking for a sell side move once again. If we gap down and gap down aggressively, then at some point I will be watching intensely for a potential red to green move on our favorite names. I think the bulls have a 24 to 48 hour window to do so. Okay. If the bulls do not do so in the next 24 to 48 hours, if we don't get that 400-500 point kind of dead cat bounce in the next 24, 48 hours, I don't know what to tell the perma bull, because this history has shown us that this should happen, right? History has shown us this. This is, guys, we're going back nearly a month of calendar. Okay, we should really be getting some sort of relief balance. Again, I don't even care how big the move is, but it has to come. So it's very, very interesting. It's very, very odd that we haven't got it yet. But again, if you are trading both sides of the market, again, I kind of outlined the game plan for tomorrow. Again, gap up, I'm looking at downside channels. If we gap down, then I'm looking for a potential, not necessarily potential red to green, but a potential, some sort of clues that we are stabilizing for at least a historic repeat, right? Our history of repeating itself, of getting an aggressive dead cat bounce within a macro sell cycle. We'll see, guys. We'll see. Guys, have a great night, everybody. God bless, folks. If you are a brand new trader, again, yes, this is aggressive. It's putting you in a position that you're making very, very aggressive decisions. The point is, when you open up your first trading account, Nobody tells you, right? Nobody tells you that you're going to go through this. You're going to go through this, right? You trade long enough, you're going to go through a bull market, you're going to go through a bear market. This is great, folks. This is great. Again, if you are one of these people who relies on social media, yo, dude, you're a must follow. Where's the next place where the stock can go? Then you're dead. You're a walking corpse. But if you are traditionally a person who believes that you can do this for a living, this is the greatest teacher, right? This is the absolute greatest teacher. You're watching the market in the last couple of years give you both sides of the market. And once you start realizing that the market does what it wants to do and not what you want to do, then you go to thinking delta neutral and accept that everything the market has to give you. Guys, God bless everybody. Stay blessed. Have a great day tomorrow. And God's help, I'll see you all on the field. Take care.